chips. I'm getting rich. Cash. Running up digits. Counted up 6 stacks. My money flipping. Let's take a trip. Splash. Standing on business. Tycoon rich. I'm rich. Look at my chips. Yeah. I'm getting rich. Running up digits. Counted up 6. My money flipping. Let's take a trip. Splash. Standing on business. Tycoon rich. Cash.
All right. Good morning. Good morning. Good morning. Happy Tuesday, everybody. Happy Tuesday. So we're going to get right into it. Of course, in the beginning, we talk about what we trade, then we talk about how we trade it, and then we go into how to actually look for those trades and where to kind of take your profits, set your stop loss, and all of those important details that make a difference in your trading. Okay, so what we trade is the NASDAQ, which is an index that caters to investors interested in innovative growth oriented companies like Apple, Microsoft, Amazon, and others offering a diverse selection of industry leaders driving economic progress and technological advancements. And so these are some of the companies that are actually comprised in the NASDAQ index. Some that you all may be familiar with, of course: Ross, Adobe, Microsoft, Monster Beverage, Comcast, Apple, Cintas, Paychex. Okay, a lot of well-known companies that you guys are already familiar with, and we trade the performance of of this index. Okay, and so when we trade the performance of this index, we use a very simple strategy. The first thing that we want to do is we want to make sure that we're looking at what we call the 200 EMA. Okay, but it's one thing to trade off the 200 EMA, but then there's another to actually put yourself in position to make sure that you're profitable with it. Okay, so we're going to talk about how and where to kind of set stop losses and take profits, okay, based on where the market is. Okay, so last week we talked about, how to enter the trade, but now we're going to talk about how to actually manage the trade. Okay, how to manage the trade. So, of course, as we all know, we have our key levels when we're looking at the market, right? So I'll just set a couple of levels here. Let's see if I can grab a couple of lines, see if it'll let me do it this time. Yep. Okay, so we got a couple of lines here. We'll use these as our key levels. Okay, let's see. I'll make a couple of these here. And with these key levels, you're going to see significant movements, okay, with these key levels. So I'm just going to highlight that so you guys can able to see what's happening with this. So let me just get one more. All right, awesome. So this is considered the key level. All right, these lines here. All right, so let me just move this over just a bit here, okay? And at every key level, there's significant buys and sells. We talked about that last week, okay? So let's just say, for instance, let's say we're on a downtrend right now. So we know if we're on a downtrend, the 200 would look similar to like this. It would be like similar to this, something like this, okay? That's our 200. Okay, so we see the overall direction of the market is going down. Now, once we see the overall direction of the market going down, we're looking for areas where we can take profit and set our stop loss. Okay, so let's just imagine that these are candles here. I'm going to change this to red because we're in a little downtrend here. So let's just say that these are candles, and I'm going to try to emulate the pattern as if it's in the market. So let's say the green is here, then we have red come down, then we'll have some more green come back up here, red, and then some more green here, red color here. And I'm going to show you guys, if we were in the market, where would we set our stop loss and take profit based on the patterns of the candles, okay? Based on the patterns of the candles. So let's just say, for instance, we're just going to look at this area for right now. you get into a sell BPC that happened right here. Okay. So remember, that's the breakout pullback. Okay. So I went over that last week. So if you're not familiar, you can look at last week's live session and you'll get more detail on that. Okay. But we're looking for that BPC. So if we enter here, right, let's just draw a little line right here. This is where we entered the market, about right here. Okay. We want to figure out, where do I place my stop loss and where do I place my take profit? So we'll use this as some pivots here. We'll use this yellow line as pivots here. Okay. Okay. And let's say you entered, let's just say this pivot is valid right here. Okay. Let me go back a little bit. We're going to go here, 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 and then we're going to make that a pivot. Okay. So you entered here. Okay. What you want to do when you're setting a stop loss, okay? Remember, your stop loss is like your protective mechanism. It helps you with risk management so that you don't lose a substantial amount of money when you're trading, okay? If you're trading without a stop loss, you're doing it all wrong, in my opinion, okay? You want to make sure that you have a stop loss because you can lose your entire account if you don't. Okay, and great morning to everybody that's joined. Great morning, great morning. Okay, so we're looking at this pivot right here, and we can see that the previous pivot, based on where these little dotted lines is considered price. Okay, based on the previous pivot here, your stop loss should be right above the previous pivot. Okay, so this is your stop loss. And I'm going to show this on a chart as well, but I like to give the visuals first. So when you see it on a chart, it looks more clear to you. Okay. So this is our stop loss right here. All right. This is our entry where we entered. Okay. All right. And let's just say our pivots came down. Let's say we came down here, then we pivoted here, came back down here. Right. So let me actually make that a little bit more clear. So we came down here, and then it pivoted here, and then it came down here. Okay. So where do we place our take profit? Where do we place our take profit? Okay. We see that this pivot for sell is here, right? Because this is our entry. Okay. The pivot that's above our entry is this one. The most recent pivot that's above our entry is this one. Okay. So I'll actually put a circle around it so you guys can know. Pivot just means that it moves up. That's the pivot. Down. That's the pivot. Up. That's the pivot. Down. That's the pivot. Up. That's the pivot. Down. Those are pivots. Okay. So when you look at where you are, you want to look for the most recent pivot near where you were. Okay. Just for clarity. Now, this is our pivot right here. That's the closest to our entry, because here's our entry. So the one that's closest to it above our entry line is this pivot here. The next pivot that's beneath our entry is our take profit. Okay. So if we look to the left, the next pivot that's beneath our entry is our take profit. So this pivot right here. So we would set our take profit about right here for take profit. Okay. That's our take profit. All right. Why? Because when price came to go, our profit here before or if price decides it wants to move back up. Sometimes it works out that way. Sometimes it doesn't. Sometimes it'll keep going down. But you want to take your profit first and then decide if you want to stay in or not. Just depending on your trading personality. And the students that's in Blue Chips Academy, y'all know what I'm talking about. We went over this last trading session. So you have to know your trading personality. Are you a scalper, a day trader, or are you a swing trader? Okay. So now that we have that clarity for the downside, right? For sales, stop loss, entry, take profit. So let's just say you're a scalper. Let's just talk about that for this session. Okay. And right now, the goal is for everybody to eventually get to the 200,000 funded account, instant funded account. Okay, so let's just use 200,000 as an example. Okay, we're working our way there. We're not there yet, but we're working our way there, right? So 200,000. So you have to understand that you cannot, because your distance for take profit and stop loss is shorter. Okay, so for example, with a $200,000 account, the maximum you want to risk in one day is $2,000. That's the maximum you want to risk in one day. Okay, so if you put that into like a third perspective, let's just say each trade you risk about, let's say $600 for each trade. Okay, just to keep it safe, $600. Okay, if you risk $100 per trade, okay, your stop loss when you measure your trades out should not be more than $600. Okay, so that means if price continues to go up against you, it takes you out of the trade. You only lost 600 instead of maybe, let's just say 6,000. Okay, now your take profit, if it's a 1-to-1, which typically it is, 1-to-1 ratio, meaning I risk 600 and I'm also set to gain 600. Should be 600 as well. Okay, so if your stop loss hits, you lose 600, and if your take profit hits, you gain 600. Okay, that's how that works. So knowing that this is a factor here, you want to stay well beneath the daily loss. Okay, you want to stay well beneath the daily loss, because if you lose that trade, well, now you have two other attempts, depending on how much you win or lose on those trades. But let's just say 2 to 3 other attempts to trade that day before you max out your daily loss. Okay, before you max out your daily loss. So you're talking about, let's just say you had 2 positions in a day and you won both of those positions. Well, now you're up $1,200 for the day, and you probably only took you a couple of minutes to enter that trade. All right. So that's what we're looking at as far as scaling. Now, if we do this on a daily basis, let's just say to make numbers simple, $1,000 a day. Now you're up $5,000 for the week. Okay. $5,000 for the week. You do that for the month. That's $20,000 per month off of a $200,000 account. That's about 10% for the month. Okay, which isn't bad at all. All right, so that's the bigger picture. All of this ties into the simplicity of knowing where to manage your account, manage your trades, and how much you should be managing your trades. Okay, so it's one thing to know where to place your stop loss and take profit, but are you staying within your risk parameters? Are you staying within your risk parameters? So whatever that daily maximum loss is, you want to basically risk a third of that to stay within those boundaries. Okay. So for instance, the smallest account you can get is a $5,000 account, and the maximum daily loss for that is $150. So a third of that is $50. Okay. So that's the maximum loss. All right, that you want to risk on one trade if you're scalping. Okay, so that's the basis of it. So this is the example for sales. Now let's look at an example for buys. Okay, let's look at an example for buys, knowing where to place those stop losses and take profits for the buy. So the first thing we got to recognize is the 200, right? We got to see what direction that 200 is looking like. So let's clear this out, and let's get another line for the 200. Okay, great morning to everybody that's joined. Great morning. All right, so let's make our blue line for our 200. And this time we're going to go to the upside here. 200 EMA, meaning the average movement of the past 200 candles are moving up. Okay, great morning, everybody. So now what we want to do here is we want to look at the pivots on the upside. Okay, look at the pivots on the upside. Sylvester said, let's go, Coach Blue. I'm sorry, y'all. I'm late on the comments. Wake up, wake up. Everybody, is a beautiful trading day. Mary said, happy new day, Coach Blue and fam. We're up and ready to go, Sylvester. That's what Mary says. All right, then let's do the doggone thing. I love them. Great morning, guys. Great morning. Great morning. I hope you guys are having a wonderful, wonderful morning so far. So let's look into this, guys. So now we have the 200 going to the upside. Okay. Now, with the 200 going to the upside, let's illustrate some patterns for the bullish movements. Okay. So we'll have something like where price kind of moves up like this, right? And then we'll have some red push down a little bit, and then we'll have price to kind of move up again, right? And then we'll have a red to kind of push down. So let me grab a couple of reds too. Okay, we'll have a couple of reds, and then we'll have a couple of reds like this, and then we'll push up. So of course, you're looking for a BPC right here. Let's just say this level right here. We're looking for our BPC, right? Price breakthrough, pullback, continuation to the upside. Okay, so when we're looking at this, we have to look at our pivots to determine where we want to place our stop loss and take profits. Okay, so let's pull our pivots back out, and let's say we're moving here. Okay, we come down to here, and then we move up again here. Okay, actually, let's make this pivot a little bit more. Right, so we go here, we come down, and then we go here. And then the pivot before that, right, so we go here, and then we come down. So let's just say that those are our pivots. I know they're a little crooked, but we're going to say that those are our pivots, all right? So here we have our entry. Let's say we enter here, okay? This is where we entered, okay? So we entered into a buy because price is moving up. Remember that. And so now, in order for me to determine my stop loss, I have to look for the previous pivot beneath my entry line this time. So for the sell, my stop loss was above my entry line. For the buy, my stop loss is going to be beneath my entry line. Okay, so if I look to the left, I can see the pivot that's beneath my entry line is right here. So this is where I'm going to place my stop loss, right? Right under there. Okay, somewhere here. Now, the pivot that's above my entry line, that's closest to my entry line, because this one is basically considered at this entry line here, this pivot right here. But the one that's above is this one right here. Right here. So my take profit is right here. It's not this one. It's this one. This one is closest to my entry line. That can be a little confusing sometimes, but it's this one here. This is one that's closest to my entry line. So you have to pay close attention to that. So that's where my placement is for my take profit and my stop loss. Okay. And if you guys have questions, please feel free to ask. Please feel free to ask. That's very important that you ask questions. That's how we learn. All right. So now that we have the take profit and the stop loss, let's go ahead and let's go. Let me put that here. 1 second. So we have our take profit. Okay. Now that we know the spacing and where we want to place our stop loss and take profit, we want to make sure that we're risking the right amount. Okay. So on the earlier example, I showed a $200,000 account. Now let me show a $100,000 account. So with a $100,000 account, okay, you don't want to risk no more than 1% on your account. Okay, 1%. So in this case, that's $1,000. Okay, $1,000. Now, based on the maximum risk for the trade should be a third of that, right? So we'll just say $300 to play it safe. Okay, because we don't want to be right on it. We want to be get a little bit cushion, right? So let's just say $300. So your maximum risk on your trade when you have that $100,000 account is $300. So my stop loss, when I'm measuring and I'm putting it, you should never enter a trade without already measuring your stop loss and how much you're risking. You should know how much you're risking before you enter the trade. I can't express that enough. You should know how much you're risking before entering a trade. And every setup is not the same. So one position might require, let's just say, 1.5 lot size. The next position might require 1 lot size. It really just depends on your distance and how far you are. So you can't assume that one standard lot size is the same every time. Okay, it's not the same every time because it has different risks based on the space in between where you are and where your take profit and stop loss is. Okay, so measure out the amount that you're risking on the trade before you get in. All right, so let's just say, for instance, you get into this trade and now your risk is $300 at your stop loss. Okay, and we're talking about scalping now. We'll get into position trading, also day trading. We'll get into that in a minute. Okay, so the take profit here, okay, is probably around the same amount, 300. Okay, so again, the same scenario. You can make anywhere from $2,500 to $5,000 in that week, depending on how much you trade and how well you execute those trades. Okay, so $2,500 to $5,000 in a week. I'm sorry, off of $100,000 account. Okay, so you do that for the month. If you get $20,000 in a month off of $100,000 account, that's great. That's 20%. Okay, but even if you get 10, that's still good. That's $10,000. That's a 10%. Now there's an 80-20% split, so you won't get the full 10 or the full 20, but you'll get majority of it. Okay, so location and placement is very important. Where am I setting my take profit and how much am I risking? Where am I setting my stop loss and how much am I risking? If you don't know what that is, or if you don't know how to set it up, then ask questions. But that is extremely important. Okay, so now that we have a visual on that, let's go to the charts and let's see how that's actually applied. How do we measure that? What tools are we using to make sure that we are measuring our risk properly? Okay, measuring our risk properly. Okay, so let's go to that. We're going to navigate over to our charts here. 1 second, guys. Let me just clear this out. All right. Awesome. Okay, so let's go to, we're going to pick a random chart here. And with our random chart, we're going to measure out. We're going to measure out what we have. All right, so let's look at this really quick. This is USD CAD. Okay, this actually just crossed over to the downside. So first thing I want to see is, what's my overall direction for CAD? We're moving up. We're moving up. It's a lot of noise right now for USD CAD. See all of this choppiness here? A lot of noise. So when you see this, especially for scalpers, when you see there's a lot of back and forth like this, don't risk as much on your trade. So for instance, if if you risk, let's say $50 on your trade, instead of risking 50, I would say probably go for half of that, right? Go for half of that, maybe at like 25, okay? If you have that $5,000 account, okay? So for that $100,000 example, let's say you normally risk $300 on the trade, then keep it at 150 actually. I'm sorry, 150. Okay, so when the market is choppy like this, you have to be very careful. But let's still look at an example here, and I'm going to do a very, very small lot size real quick, but just to show the example. Okay. Typically, let's see if we can find a better setup. If I can find a better setup, then we'll come back to this. Okay. But let's go to okay, AUD USD just crossed. Well, not necessarily. Let's see here. I'm seeing if I can find a good setup that already kind of happened. That's not too bad here. Okay, let's go with this Euro USD. All right, so let's say I enter a small trade here. Okay, so the first thing I realize is the 200 is moving down. This blue line right here, this is our 200 EMA. 200 EMA is moving down, the blue line. Okay, remember we went over that. That's our ultimate determination for directional bias. Okay, now that we see that the 200 is moving down, I'm looking for sales. So in this case, I'm going to enter a sell because we have not only do the 200 move down, but we got a crossover here. And I'm going to take my Keltner out for now, guys, just so you guys can see things clearly. All right. So this white line right here is the 20 EMA. That's the 20 EMA. Okay. We see that this white line crossed over right here the 200. It crossed over the 200. Okay. So that's my signal for entry. So before I enter the trade, I need to measure how much I'm getting into the trade. Okay. But for this sake here, I'm doing something very minimal because it's for an example. But let's just say, let me pull up my calculator. So I'm coming over here to the right. I'm clicking on the arrow. Okay. I'm clicking sell because that's what I'm looking for is a sell. I click stop loss. I click take profit. Okay. Remember the example. This little dotted line right here, this is current price. So I need to look for the pivot that's above this dotted line for my stop loss because I'm looking for a sell. So I drag my stop loss, the red one right here that says draft SL, that's the stop loss. I drag that to the pivot that's above my stop loss, and I'm right here. This pivot right here. This is the one that's above the entry line, okay? My take profit is going to be beneath my entry line, beneath this dotted line, and that's right here. Okay, that's right there. All right. So if I was risking, let's just say, I would increase my risk right here. Right, my risk is going up. So now I'm up to 12, and then I go up here. Now I'm going up to 16. Okay, and now I'm at 21, around $20 right here. So 0.10 lot size will put me where I need to be. Okay. So then after I have my measurements out, right, I have where I want to place stop loss in my take profit. I have how much I want to risk on that trade. Okay. Then at that point, now all I'm doing is clicking sell. And you can see my stop loss is placed here. My take profit is placed here because that's where I wanted my lines. Those were my imaginary lines at the time. Okay. And so based on where their placement is, if the price comes down to here, so if the candles come down to this point, it's going to take profit for me and take me out of the trade. Okay. If the price goes against me, I'm going to lose $20, but I'm not going to lose more than that amount. Okay, and by the way, we did have news at 8:30, so we didn't get too much movement from it, but we did get news. Okay, um, and so we moved to the upside here. Okay, so what we're looking at now is price kind of trying to move to the downside. So we'll see if it closes out at the end of our session. We'll check in on this. All right. So that's what we're looking at in regards to everything that we just applied. We got our directional bias from our 200. We got our crossover. And now we figure out where to replace our stop loss and take profit. We set our take profit beneath the entry line for sales, and we set our take profit above the entry line for buys. We set our stop loss above the entry line for sales, and we set our stop loss beneath the entry line for our buys. Okay, it takes practice to understand the direction, but if with continuous practice, with you actually getting into the trades and doing them yourself, it'll start to become second nature. All right. But this is Euro USD. So let's go look at NAS and let's see what NAS is doing for today. All right, NAS is moving up very nicely. Okay. So we got some new levels here for NAS. So now we have to mark this off. Let me take this alert off here. And let's see where we can place these levels here. So I'm going to bring this up here. And then I'm going to bring this one up here. So at one point, this was all-time high right here. And now look where we are. We have a new all-time high for NAS. All right, so we have clear understanding of where price is. NAS is clearly moving up, so our directional bias for today is a buy. Our directional bias for today is a buy. Let me tighten this up just a little here. Okay. So our directional bias is a buy. So the two areas where I will want to see possible price action is this. So we know that we're looking for our BPC when we're getting into it. Okay. We're looking for a bullish BPC. And great morning to anybody that's joined. Okay. Great morning. Great morning. All right. But we're looking for our BPC. All right. Troy said, great day, y'all. Great day, Troy. Great day. And Mary said, we have some lives to change. We're on a mission and about to do some kingdom work. That's right, Mary. Definitely God's work for sure. All right. So if we walk through this process here, we'll see that these are two areas that we're looking for entry line at the 22,973 level. And then we have the 23,032 level. Okay. Those are the other ones that we have, and we can pretty much go from there. So let's look at our bullish BPC. And I'll go over what a BPC is as well for those of you all who don't know. I'm not going to go into too much detail because, again, we covered that last week. But I will go into what we're looking for. All right. So these are the two levels of entry that we want to see a possible BPC. I'm not even going to entertain the sale today. Not at all. So if I don't get a buy opportunity, it's just going to be a no trading day for me. There's too much momentum coming to the upside for NAS to look for sales. You want to trade in the direction and the momentum of the market. You don't want to trade against the momentum of the market. Is there a chance that sellers can come down and push it down? Absolutely. Absolutely. But every trade, you don't have to take every trade. Okay? There's so many opportunities all day, every day for trading opportunities. Okay? So you don't have to always take every trade. Okay? So let's look at this and let's look at the patterns that we're looking for here. If price comes down, let's say price gets rejected here and we break a couple of levels here. We come down here, okay? The 200 might be somewhere around here at that point. All right. I want to see, let's say we break this level. I want to see a BPC or a double bottom at this point here off of the 200. great buy entry. Great buy entry. That's one thing that I'm looking for BPC. So right, we get our double bottom here. This last leg is our BPC, breakout, pullback, continuation. Okay. Now, the next entry is right here, right where price is. So we get a breakout to the upside, we pull back, and then we just continue to fly. And we don't know how far it's going to go up because this is new price discovery here. Okay. So we don't know how far we're going to go. So we don't have any key levels to set because there's no indication of price behavior that has happened in the past. All right. But let's look at what a BPC is. So we have a B, which stands for breakout. Then we have our P, which stands for pullback. And then we have our C, which stands for continuation. BPC. Okay, I probably should have typed that, but it's all good. So breakout, pullback, continuation. All right. Those are the three things that we are looking at. Breakout, pullback, continuation when we're trading NAS. Why? Because NAS is such an aggressive a pair. And so a lot of times you will get breakout opportunities. But you want to make sure that it's a breakout and not a fake out. Okay? I can't express that enough. You want to make sure that it's a breakout and not a fake out, because that happens a lot. So how do you determine if it's a breakout and not a fake out? Well, sometimes what you'll see is price will break out of a key level. This white line right here is one of my key levels, okay? It'll break out crazy like this, right? And then what will happen is a lot of retail or novice traders will enter for a buy because they say, oh, that's a nice strong candle. These are their entries, right? Let's just say they enter here. And then what the institutional traders do, the bankers, the large global bankers, they bait these traders here to enter the buy and then slam price down to the bottom side and take their profits off of that. Okay? So they reverse the price. So what we want to see is confirmation. Now, it's not all the time, okay? Because sometimes you still get faked out with a BPC, but the BPC helps avoid most of those fake outs, okay? So we look for the breakout here, okay? Then we look for price to pull back to this key level. This is significant because if the price doesn't stay at or near this key level and it continues to come down, well, now we're looking at a possible reversal. Okay? We're looking at a possible reversal versus price breaks out here. The candles breaks out here, which is what it's doing, possibly doing right now. Okay? Pulls back here, uses this level now, this key level as support. Remember, is what? Our floor. If you throw the ball down to the floor, the natural reaction is for what? The ball to bounce up. So when price comes down here and it stays here instead of coming all the way back down, that means this is a strong level of support, or this means that this is a strong floor. So that now when price comes here, it bounces up like that ball analogy and goes to the upside. Okay? So we get our breakout, we get our pullback, and now the continuation is our final confluence that tells us when to enter the trade. So price breaks past where it pulled back, right? We might see an engulfing candle or something of that nature, right? It breaks past this entry line right here. And then what naturally happens most of the time is price follows suit. Okay? Price follows suit. So we're looking for that breakout, pullback, continuation. All right. So let's go take a look at what's happening because it looks like we're already getting a breakout here at this level. So I like to look for my BPC on the 1 minute, and I like to set my take profit and stop losses based off of the 5 or the 15, just depending on how the market looks here. All right, so we definitely have a breakout here, okay, which means the body of the candle, this is the body of the candle. So let's just say this is a candle here, okay. This is called the wick. When you see little lines at the bottom or at the top, those are wicks, and this is the body of the candle right here, okay. So the body of the candle right here, that's the body, broke out past this key level right here. So that's a valid breakout, okay. Price pulled back already to this level right here, okay. So price might take off before the market even opens, okay. Now normally we wait until the market opens before entering in any trades, okay, because the market can shift gears instantly right before market opens. So you want to, when the market opens, so you don't want to kind of try to get ahead of it. You want to wait, see what the market does, and then make the adjustments from there, okay. But here's our pullback here, right? See this red candle? We're pulling back. We're coming back down close to this key level right here, okay. If this candle stays at or near this key level, then it's a valid pullback. But if that candle starts to come all the way down here and we start to see this, that's no longer a pullback, okay. That's no longer a pullback, okay. So we have about 50 seconds left on this candle, and we have less than 3 minutes left until the market opens. All right, so do you guys think we're going to enter a buy or a sell today? Let me know in the comments section. What are we getting into today, a buy or a sell? Are the sellers going to come in and completely reverse the price, or or the buyers going to keep up with their momentum? What do you guys think? Are we going to get into a buy or sell? Let me know in the comments section. What do you guys think we're going to do today, a buy or a sell? Let me know. Great morning to everybody that's joined. Great morning. Glad you guys could join with us. We got less than 2 minutes until the market opens and see what opportunities we're presented for today. Okay, so Mary said, does this concept apply to anything that you're trading? Yes, Mary, it does. It does. It actually does apply to anything that you're trading. You want to make sure that your trades are well managed with that, and setting your stop loss and take profit. That applies to no matter what strategy you have. You should be able to determine your stop loss and take profit. Oh, guys, look at this pushback right here. The seller's trying to come in. Okay, Sylvester says a buy. Mary says a buy. Okay, I like it. I like it. Yeah, I'm still pushing towards the buy as well, guys, but we'll see what happens. We'll see what happens. Remember, with buys, guys, we want price to go up. So we want the candles, that's price. Okay, the candles are just a visual representation of price. We want price to go up. Sales, price comes down, okay? But when we look at the overall direction of the market, we can see that price is trying to move up. So that's why our directional bias is a buy for today. And the 20, which is this white line right here, is above the 200. So that's another indication too. All right, 30 seconds. 30 seconds until the market opens. 30 seconds until the market opens, guys. Let's see what we get for today. All right. Great morning, everybody that's locked in with me. Great morning. Let's see what we get for today. Market is about to open in a few minutes here. Troy says a buy. Okay, Troy. We heard you, man. We heard you. All right, here we go. 5 seconds. Let's see what we get for today. Now, if we pass this area here, market is open. If we pass this area here, I'm entering a buy. I'm going to let y'all know that now. Okay, if we pass this area right here, that's a nice strong move. Let's see if they can keep it up. Now, where do we place our stop loss? So I'm going to go ahead and get ready for my trade here, right? Oh, yeah, that's good right there. That's a nice strong candle. So I'm getting my buy ready. I'm going to put a stop loss, but I'm not going to put a take profit. I'm going to exit manually because we don't know where our next level is, okay? So the stop loss for me, okay, if we zoom out here, the previous pivot is here, okay? So that's where I place my stop loss, right here at, what is that? 23012.05. Oh, but the sellers are giving some pushback. Look at all of that wick on that candle. Let's see how it closes, guys. The sellers are definitely sitting up here. That candle started off strong, but that wick came down pretty aggressive. So let's see what happens. Let's see if we still gonna get into our buy. But my stop loss is right there at what is that? 23,012. 23,012 is my stop loss. Now, NAS typically move on average 1,000 points. So let's just measure from where we are to see if we can get a possible gauge for stop loss here. I'm sorry, for take profit. So that's about 200 pips right there. We'll go to 0. I don't know if you're going to get that far up. We'll do about 0.1% for our take profit. That should be good. About 0.12. So let's see if we can, let's see what we get. Price is kind of going back and forth right now. And sellers are trying to push price down. They don't like how the bull's been taking over the market. And it looks like our little Euro USD trade is doing pretty decent, guys. Okay. If you got into that one. Our Euro USD trade is doing pretty decent. We got 30 seconds left on this candle. So we did just get a strong bearish candle that came out of that. And now we're getting another one here. So now we have to reassess. So this is another part of trading right here, is being objective with the market. Okay. So if we look at this slope here, we can clearly see that there is a nice strong slope for the buyers, right? So let me go to the 15 minute. Let's go to the 15 minute. And let me grab. If we see the 15 minute, the 200 is all, okay. This is the only area I would consider a sell past this 200. Anything before that, I'm still looking for buy opportunities. So that's 3 key levels for buy opportunities. If it's not past that 200, I'm not even going to touch it. Okay, I'm not looking for any sales past this area here. And it's going to take a lot of price action to push price down from there. But let's just see what happens, okay? Let's go to our 5 minute. And let's see what we have cooking for today. Okay, so it was a nice little rejection right there. And this is why, notice how this candle right here in our Euro USD just took profit, guys. So great job if you got into that. But this one here, okay, this candle broke out. Okay, it broke past this key level, but we did not get our pullback. Notice how this candle is coming all the way back down. Remember, I said if the candle comes all the way back down, that's no longer a valid pullback. So at this point, to get back into a buy, price needs to pass this level of rejection. Let me move this up, actually. Let's move this line up here just a little bit. Now price has to pass this level right here in order for me to even consider a buy. Okay? Because price is coming down violently right now off of this key level. All right? And we're not going to chase anything. Okay? We never chase any trades. If the opportunity is there, cool, we take it. If it's not, then we don't force it. Okay? So that's very important to understand. Never force anything. The market is always open. There's always opportunity. You do not want to force anything. Okay? So now we're just kind of waiting to see if price retests this area here. And we're going to be on till about 10 o'clock. Okay? To see if price retests this area here, or if we break past this level here. Again, the sellers are going to have a lot of momentum to break past this area here. But I personally don't trust any sales unless it passes this area. This area is the 200 on the 15-minute chart. Okay? That's the 200 on the 15-minute chart. So if we find support in this area and then price bounces back up and retests this area and we get a nice little breakthrough, cool, we'll take the buy. We'll look for the buy. But other than that, I don't really see, any other opportunities outside of that, because everything else is just a risk. It's a risk that's not worth taking, in my opinion. Okay? It's a risk that's not worth taking. Mary said, what is it called if we trade against the direction of the 200? That's counter trading, basically, Mary. You're trading against the trend. It's called like a counter trend. So you see the market is going up. You see the buyers are in control. And then you're taking sales, so you're countering what's happening in the market. Okay? But it looks like we're finding support here at this 22,973 level. So let's see if we can get another opportunity to get into a buy here. So price, this candle here is trying to push up off of this floor right here, right? Think of the ball. Ball comes down. What's the natural reaction? To bounce up. So now it's bouncing off of this floor and trying to push up. Okay? It's trying to push up. So that's what we're looking at. And let's see if we can keep pushing forward through that. All right? Let's see if we can keep pushing forward. So there's 2 minutes left on this particular candle. We'll see how it closes. Right now, it's kind of going back and forth. Not too much clear direction right now. It started off strong to the upside, but let's see if it can close strong. That's another thing. You never want to make a decision on your trades on a candle that has not closed. Okay? You want to make sure that candle has to decide what you want to do. All right? That's extremely important. You don't want to make a permanent decision off of an indecisive candle. Never make permanent decisions off of an indecisive candle. All right? So, we're just being patient here. We're going to see. Normally, y'all know in our private sessions, I have my little jazz music on. We'll be vibing right now. But, it's a little different on the YouTube channel. So, it's all good. Okay? But we are about close to almost 10 minutes in to market open. And we're going to give this thing another 15 minutes or so to see if it wants to make a decision on where it wants to move. Okay, sometimes it makes a move instantly. Sometimes it takes time. And you have to be okay with that and understand that it takes patience for the right move. Yesterday, we didn't see a move until maybe like 10:30ish. And normally I'm off by 10. So what I do is I set alarms. I'm sorry, not alarms. I set alerts at certain price levels to alert me so I can see, okay, if it's another good entry or not. All right? Because one thing we're not going to do is sit in front of the screen all day, right? We're going to find our trade, and then we're going to get in and we're going to get out. Okay? So, if you're sitting behind if you're sitting behind the screen all day, I don't think you're doing this thing right. Okay? You should not be sitting in front of your screen all day when it comes to trading. There are sessions that allow you to take advantage of the market and get some profits. And then once that session is over, your trading day is over. Take your profit, keep it moving. All right? Okay, so we're entering our new candle here. So that other candle started off strong, but then it ended up being a bearish candle. So now we are pushing to the downside here. Very interesting. Okay. When they're red candles, those are bearish candles. When they're green candles, those are called bullish candles. Okay. Think of a bear when it attacks, it puts its hands up and it attacks down, right? Think of a bull. When it attacks, it puts its hooves, it goes up and it basically tilts its head to the upside to attack. So bulls looks for the market to go up, and bears is when the market is trying to come down. All right. So 3 minutes and 55 seconds left on this candle. Let's see if we get some action here. I think the next 2 to 3 candles will kind of determine what type of trading day we're going to have. All right. Is it a no trading day? Do we wait and see if a setup comes? Or is there opportunity to possibly enter a buy? Okay, those are the things that we're looking at right now. So it's a lot of wick on this candle. We'll see how it closes, though. It's still early. But that is a lot of wick. So it's telling me that the buyers are trying to push price back up to the upside. When you see the price candle starts down strong and then you see a wick at the bottom, that tells me that the buyers are trying to eat the price up and push price back up to the upside. Okay. But again, still 3 minutes left on this candle, so we still have some time to go for this one. Okay. So let's see what we get. Everybody was on the same page today, though. Some days we'll have some people say buy. Some days we'll have some people that say sells. But everybody's on the bull side today. So I think we might get an opportunity. We'll see how these next couple of candles turn out for us. If it finds support here and we retest this area here, we're in good shape. We might be able to find a good buy. But if not, if we get rejected again here, then I'll probably call it a no trading day, or I might just set an alert in case if it breaks through later on in the day. But 2 rejections at the same level often indicates that the sellers are trying to reverse the price. Okay, so it might look like an M. So you might see something like price goes up, that's 1 leg. You come down, that's 2 legs. Come back up, that's 3 legs. And then that final leg, that 4th leg, is the leg that pushes price down. Okay, that's your M. That's what we call a double top. Okay, where price is even, it reacts evenly at the same area, right? So it rejected here and it rejected here, double top. Okay, and then push price to the downside. All right, so we have 1 minute and 20 seconds left. 1 minute and 20 seconds left until this candle closes. Right now, it's looking a little weak. I don't know. We'll see. It did push price back up, though, from the bulls, but the next candle following this has to be a strong bullish candle if they want to continue to push price up. Otherwise, I believe the sellers are going to continue to push price down. The reason why I'm not getting into any sales, because they can push. Again, we still have a lot of buyers in play right now. So at any point, the buyers can come in and swoop the price up to the upside. There's a lot more buyers right now than there are sellers. Okay? So that's you want to play, you want to put the odds in your favor. Okay? You want to put the odds in your favor. So we have 25 seconds left until this candle closes. It's trying to pick up a little bit of momentum. It's not a bad close if it closes out the way it is right now. Just considering that candle started off as a strong bearish candle. So that's a good little indication there. Okay. And if this next candle follows suit to the upside, then we might get a buying opportunity before the end of this session. All right. So we'll see how it closes. Not bad. Not a bad close. Let's go to the 1 minute to see what's happening in real time with these candles. All right. Let's see if price can break through and get us back up here. That's what we're looking for. Okay, so just to kind of give you guys an understanding too, when we go from the 15-minute to the 5-minute to the 1-minute chart, that just means it takes, if I'm on a 1-minute, it takes 1 minute for each candle to close. If I'm on a 5-minute, it takes 5 minutes for each candle to close. And on a 15-minute, it takes 15 minutes for each candle to close. So that's the difference between the two. Okay. So we have 10 seconds left on this candle. It's actually making a nice little push to the upside. I'm interested to see if it's going to be able to retest that blue line that I have already designated there. If we do, then that'll definitely be a great opportunity to get in. Okay. And if you're just joining, great morning to everybody else. All right. Great morning. Mary said, is there a volume indicator that we can use on this platform? Probably not. We would probably have to import it. That's like a whole nother thing, Mary. This platform just has the major indicators. Now they do have this volume profile and this volume oscillator. I'll have to go over that a little later though. But it has a couple, not the ones that I use, but I can show you how to use those indicators if you want to use it. Okay. 7 seconds left on this candle. These bears are trying to fight back, I'm telling you. Now, we just went over a double top. Another thing that could possibly be, especially on the uptrend, you can see what we call a double bottom. So what I'm seeing is possibly forming is a W. So we have where we come down, up, down, and then possibly up. We'll see how it plays out, but that's what I'm seeing that could be forming right now as a possible W. So we'll see. Okay, we'll see. We have about 12 minutes left for this session, guys. Hopefully we can catch something before the session is over. Okay? Hopefully we can catch something before the session is over. And let's see what we get. Okay? Let's see what we get. 9:47. Here we go. Troy said a buy. Sylvester said a buy. Mary said a buy. And I definitely believe it's a buy as well. So we'll see if we can. See if we can get that. Okay, looks like we're trying to find support again here at this level. Let's see how it closes. That's a good sign if so. We need a strong little bullish candle though. 25 seconds left on this candle. Let's see if it can close out to the upside. That'll be a good sign of support, that we have support at this level. Because it already found support here. Let's see if it can find support again. Okay. 5 seconds left on this candle here. Not bad. Not bad. Now we just need some continuation from this move here. Let's see if we can get some continuation from this. As you can see, anything right now beneath here is noise right here. All right, so to enter a buy here will be a lot riskier than entering a buy here. Is it a possible better entry? Maybe, because you're at a lower point, but then also you're also fighting against the sellers beneath this level right here. After past this level, there's a high chance that the buyers can continue to push price up. Okay? There's a high chance of that. So let's see what happens. It's a lot of back and forth that's happening right now. So the volume is kind of low right now. Not that much movement. Not that much movement. And Mary, worst case, you can go to Trading View and just look at the indicator that we use over there, and see what's happening. Also, it's the same chart, so you can do that as well. All right, Here we go. So we got about 10 minutes, guys. 10 minutes. Let's see if we can find something. Let's see if we can find an entry here. If not, then the seller's probably going to probably going to take control of the market for the rest of the day. If it continues to push down. And if they do, then we're just going to call it a day on that one. 15 seconds. 15 seconds until this candle closes. Here we go. If you guys have questions, please let me know. This is a good time to ask while we're waiting for opportunity. Mike thinks it's a buy too. Yeah, I agree with you, Mike. I'm on the same page with you on that one. I think it's a buy as well. And great morning to everybody that's joined. Great morning. We're waiting to see if we can get into an entry. Right now, the market is kind of moving slow for NASDAQ. All right, we're getting a little bit of choppy action here. We want price to retest this blue line here at what level is this? 23,045 level for NASDAQ. If it passes this area here, then we're going to look for buys. Okay. If it does not pass that area, then we're probably going to call it a no trading day because the sales aren't valid unless it comes all the way back down here. And at this point, price might be exhausted. And that goes to our average true range. We talked about that a couple of sessions ago, right? Knowing your average true range. Okay, I think with NAS it's about 1,500 pips or something like that for NAS. Okay, so again, we're not forcing anything. Gold had a nice little move to the upside last night. Let me see. Oh, this is the 1 minute. Hold on, let me go to the 15 minute. It's about to actually cross back over. So for those of you all that are in the chat, that's another crossover. So I tried to catch this push down yesterday. It wasn't ready to push down, but we can see this move here. It's a nice strong push down here for gold. Now, of course, ultimately we're moving to the upside because the 200 is going up. So that crossover right there for a buy was really good. Okay. So if you're going against the 200, don't risk the full amount. So like if you're scalping, don't risk the whole 50, maybe half of that. But if you're going with the 200, you can be a little bit more aggressive. Okay, so $50 on the crossover to the upside, definitely. Okay, but anything that's against that, don't be as aggressive because you don't want it. The momentum is not necessarily in your favor. Okay. Let's go to NAS and let's see. NAS is still playing around right here. Still playing around. Let's go to the 1 minute. Yeah, we can see that there's some consolidation right here, y'all. So whenever there's consolidation, that just means that the candles are going back and forth like this. Red, green, red, green, red, green, red, green. You see that? A lot of back and forth. Okay, just choppy. No matter what strategy you have, you never want to enter in any trades when the market is consolidated. Okay? You can't do too much when the market consolidated. Now, at some point, the market has to break out of that and go to the upside or the downside. So now we're just trying to figure out which way does it want to move, to the upside or the downside. Which way does it want to move? Okay? That's what we have to determine. So we'll see what happens. 9:54. 9:54. Get this thing about 5 more minutes, y'all. 5 more minutes. And if we don't get our opportunity, I'm going to set my alert here at this 23,047 level so that I can be on point if price comes back up to that point and I see a BPC, we can get in. All right, just because price passed this area, that doesn't mean it's time to get in. You got to look at the patterns to see if you see another BPC to get in. Okay, that's important. So if we don't get an opportunity while we're on this session, set your alert at this level. Actually, I'm actually about to set it right now, because the way these candles are looking, it does not look like they're about to move significantly anytime soon. But that's the only trade I'm looking for today, y'all. Okay, I'm not entertaining any sales today. I'm looking for a buying opportunity. Okay, I'm looking for a buying opportunity. So if you all have any questions, let me know. We got about 5 more minutes. Mike says he don't like the fact that the 20 is below the 200 to get in a buy. That's a great observation, Mike. Excellent observation, right? So one of the indicators, let's go to our 15-minute. Now the 1 minute is a lot more noise, right? But our 20 is is definitely above the 200. And then on a 5 minute, it's kind of sitting, it's above the 200, but it's not as much as as it is on the 15-minute. But that 1 minute, this is what Mike was talking about, is under the 20. This white line is under the 200, under this blue line. So whenever we see that, that's not a good indication to get into any type of buy. Okay. So if price comes back up to this side, right, it comes back up to this level, we should see a crossover, and then the 20 should be above at that point. But right now, where we are, we're just seeing a lot of choppiness right now. Okay. So if you're online right now, especially if you're in Academy, go ahead and set an alert at this 23,047 level. So you're going to hover your mouse over. Okay. Look at the price over here on the right. Here's the price over here on the right. Bring your mouse up to the level where it says 23,047. Once you have it there, you see a plus sign right here to the right. Just click on the plus sign, and it's going to say alert, and you're going to click on alert. And what it's going to do is, when the candles cross this price level, it's going to send you an alert. Once you see that, you're going to say, oh, okay, this is a good entry. I see a BPC, or I see some type of confluence telling you that it's a good time to get back in, or well, to get in, period, because we ain't even get in yet. All right. So that's what we're looking at for today, y'all. It's 9:57. It doesn't look like we're gonna get too much price movement right now. These candles are extremely small. They're getting smaller and smaller, which means the smaller the candles, the less money is moving in the market. The bigger the candles, the more money is moving in the market. Okay. So we're gonna call this a no trading day, at least for right now, for this session. If I do get in, I'll post it in the group, in our private future/Forex group, and we're gonna call it a day. But I hope you guys still learn some information as far as your take profit, your stop loss, and how much to risk, and all of those important things that can help you continue to advance and grow. Okay, so great job today, guys. Have a wonderful Tuesday. Thank you guys for plugging in. Make sure you like, subscribe. Go ahead and hit that bell notification. I'll be back on here next Tuesday, same time, 8:45 a.m. Share this information with anybody that you think could benefit from it. And let's continue to go up, guys. But everybody in the Academy, in the next 2 weeks, we're going to start initiating our first payout. And then we're scaling up from there. We're aiming for that $100,000 to $200,000 account. So let's stay on it. Let's continue to capitalize on these market opens, and let's take advantage of those signals as well. Okay. Enjoy the rest of you guys' day. I'll talk to y'all later. Peace.